What's the difference between the second round after your angel round?
Yeah, like as time goes by, like irrespective of the name of the round, you're going to be judged much more on what the company's done and less about you as a sort of storyteller or like vision creator. So the big difference as you move from seed to Series A, for example, is, you need customers, you need paying customers, and you need a growth rate normally. Again, for certain types of company, like it might be just that you've got, accreditation of some description. But for most like sort of software type of things, then you need revenue and you need a growth rate. Because really what your story generally at Series A is more around, I've got a notion of sort of product market fit. There are customers that want this, I can demonstrate that, and they stick around and they tell their friends, and that number is growing. And then really you're raising the Series A really to sort of roll it out on a larger scale. So really to say, well, if I want to capture the rest of this market very fast, then I need a repeatable channel of acquisition, and I need to raise money, and I need to I need to build more product, and I need more people to sell it. That's normally what happens. So you're going to be judged much more on less about you and like your vibe, and more about what the company's done. So that's the kind of like the big difference. There are other sort of more subtle things that happen sometimes. Like tactically, you might really want a certain VC because they have strong expertise in the area that you're in, or they've got often a lot of portfolio companies that could be your customers. Those sorts of things. You might want to think about those things, where very early stage founders rarely think about those things.